All right, greetings all. Thank you for tuning in here. So you may have noticed my image of the sun, and yeah, there's a short squeeze going on in some of these solar stocks, and short squeezes are a pretty good opportunity to make money if you're someone who knows how to trade options, because when a short squeeze comes along, the stock rips higher really fast, and then when the short squeeze ends, it rips lower really fast. Now, let's talk about what a short is. Sometimes someone thinks the stock is going to go down. So what they do is they borrow the shares from someone else and they sell them. And the hope is that the price goes lower and they could buy their shares back and return them and then keep the difference. Now you might be saying, well, I wouldn't lend my shares to anyone. Well, if you have a margin account and you have shares in it, somewhere in the fine print there says you would be willing to lend your shares out. Now, people that are short want the stock to go down. Sometimes it starts going up, and some of the people that want it to go down start to lose money. And they start to say, wow, I better buy this back. I better cover my short or buy back the shares I sold at a loss. The bigger or the higher that share price goes, the bigger that loss will be. It's the exact opposite of a selling panic, right? If people are long a stock, like United Healthcare, and they just start panic selling, well, they just get really aggressive. They throw in the towel. They don't care about the price. Now, the interesting thing about the old short squeeze is that if the price gets high enough, the people that loaned out the shares to the short sellers will decide that, hey, you know, I want to sell my shares. I'm going to call up my brokerage firm and I'm going to sell them. And the person who shorted them gets a call and they say, all right, well, listen, man, you got to return the shares. We're calling them in. You got to buy them regardless of the price. And that person has no choice but to go out and buy it. So even though they don't want to buy it, they have to. And then the thing goes parabolic. And when the short squeeze is over, when all the shorts are covered, the stock falls right back to earth. So if we look at, oh yeah, this United Health, man, what a story this is. This is going to be like reminiscent of Enron. But if we look at Sunrun, right, look at that move higher. So this could just fall right apart. People start to panic if you're short and the price goes much higher. These are solar companies. My guess is that people were shorting these ahead of the Trump administration, or after the Trump administration, saying that the energy policy is going to change, because a lot of these companies wouldn't exist if there wasn't for government subsidies. I mean, the companies suck, they lose a lot of money. But anyway, here's another one. All right. So Solar Edge, right? Short squeeze. When this thing reverses, is going to fall right back to earth. So a strategy is, right, if there's a stock that has a really high short interest, maybe you buy some out of the money calls a little bit out. And then when that short squeeze comes in, when we get up to maybe a resistance level like we did here, you close out and you wait for the collapse. And then you buy puts on the way down. Now you might be saying, well, gee, Mark, how the hell do I figure out what stocks have a high short interest? Well, you can just go to highshortintereststocks.com. I mean, I hate to laugh because this website hasn't probably been updated in years, but I mean, this is great. I check this every week. So you can see Sunrun. 33% of the shares that are outstanding have been borrowed by people to short. All right. If we go to Sunrun, that's up around here somewhere too. Sunrun. Or so, about 33. I'm sorry, Solar Edge too, about 33. This is extraordinarily high. Typically, if we look at a stock like Apple or Tesla, the short interest is probably going to be like 2 or 3%. So remember, every stock that is short needs to be bought back. Sometimes you get these CEOs that they have these companies that suck ass and they lose a lot of money, and the stock crashes and they blame it on short sellers, and that's not the case, right? A high short interest, as we've seen, is bullish for a stock. A lot of these people that whine and bitch, like, I don't know, they're out there all over the place. I'm not going to bring up names, but uh, if a CEO starts saying, "Oh, my stock is down because of short sellers," well, you know what? Go buy another company, because that person is just whining and complaining and looking for excuses. So yeah, so that's it. We got Sunrun, we got Solar Edge. Um, First Solar too was I mean, it's probably a short squeeze too. I don't think it's to the same degree because the short interest is not as high as in these other companies. But I would suspect that Sunrun and Solar Edge are going to see something like this. The reach at resistance. And when the short squeeze falls apart, it falls apart fast. So even here in First Solar, maybe it's not to the same degree, but it is a high short interest. This thing can just refill this gap and drop right back down. So that's it, everybody. Going to be some good ideas on the short side, meaning buying puts of some of these solar stocks come next week. And we will talk about it then. So thank you all. Have a nice weekend. I'll be putting out some market analysis tomorrow. And, if the healthcare sector reverses and it's starting to, that's going to be the catalyst that really pushes the broader market higher. Because the market's been soaring over the last couple of days or a week or so, but healthcare hasn't been there. And when it is, that's going to be the next catalyst for the next leg up. Okay, everybody, have a nice weekend, and I'll see you soon.